Yeah, I think I really like the idea that you mentioned, the team concept, right? And for you, like you started your fund from a college dorm with two of your other partners. And I remember you mentioning to me that you were mostly in charge of fundraising, and your partners, I think it was Jonathan and Luca, right? Jonathan was in charge of the algorithm, the technology, the system, and Luca was more in charge of the strategy, right? And you know, I was just super curious, like back then, like how were you able to find each other, and how did you, you know, kind of decide to work with each other? And it, you know, a lot of the startups, it's extremely hard to find someone that you really click with, that you work well, and there are companies that fell apart because of co-founders breakdown, right? So I wonder, like, what was your like secret recipe of like finding your partners and how that worked out?
Oh man. So me and my co-founders, before we met each other, we had almost nothing in common.
Oh, wow, that's super surprising. Yeah.
We're different majors, different backgrounds, different hobbies, even like we're just different people. I'm a lot more social. I think I like to like, you know, like have fun and talk to friends. And both of them actually, they would rather just like sit at the computer and be like, they're very introverted, so they would rather just like, you know, call and talk to their computers like by coding. So anyway, then what happened was I had met them, well, mainly I met them originally through something different, and then when I was founding this company, we met through like a more like trading competitions and trading activities. In the US, there's like for instance, the Rotman trading competition is probably the most famous one. So you can do these competitions. I think, and I think it was in Japan, they sent a team to Rotman for the first time recently. So it's possible to participate. It's an international event. MIT has an international trading competition also every fall or spring. I can't remember. They have one every year too. So we met through these competitions because they're just kind of fun and, you know, good experience for students to meet each other and learn. So so we met through that and realized, wait, we have the same career. We are different people, but we have like the same career aspirations. So decided like, why not start this business together? And also because our backgrounds are different, it's actually good because that way we can handle the three main divisions of our company. Like each of us can handle each of those because we each have such different backgrounds and prefer, you know, doing those different tasks. And then I would say like realistically, actually, how I originally met them, I met Jonathan through, let's see, we were in the same dorm. So since our freshman year, we were neighbors in America because like the dorms are co-ed. So my roommate, the guy, I shared the same toilets, you know, as these guys. It was disgusting. Same showers, you know, like it was like kind of a gross environment. But at least I got to meet some really smart people. And so met him. I was really close with Jonathan because we were just neighbors since freshman year. And then with Luca, I actually met him because of anime, because we just follow the same internet anime forums and groups and like the same shows. And so I guess that's one thing we had in common, was we both liked the kind of similar shows and stuff. So that's how we originally met.
Yeah, it's great that you share like different skill sets, but you have like common career aspiration and also you know, hobbies. You can like talk together, and when you work together, it's like more fun, right? I know people always have this like airport test that whether you're able to like work with someone for a long time, whether you want to be around them, right? And for three of you guys, you're pretty much like three musketeers, right? I would say it works out perfect. So for you guys, are you guys still working together? And do you still have the responsibilities that like you first started?
Yeah, that's a good question. So we've kind of worked together for the most part over many years now. But at this point, because we started Databento, I'm actually, this is probably the first time I've said this in public or out loud, but I'm actually planning on leaving Domeyard. And
really?
So I'm planning on, I was gonna confess in Japanese on Twitter at some point and be like, "Taishoku shitai to omoimasu." But then I decided like, it's just not, I don't want people's like attention to be like, why am I doing? The biggest reason for me is because Databento is a lot more both meaningful and exciting. And also I'm learning because I've been at the hedge fund for many years. I accomplished every goal I want to achieve personally in the hedge fund already. So I feel like it's time for me at least to do kind of my own thing again and start. I like starting from like nothing and building from the ground all the way up. That trajectory to me is like very exciting. So so by end of this year, most likely I will be out of we'll see, but that's the plan, at least, is to be out by end of the year. And then also in terms of launching Databento, we'll probably be launching it around end of this year as well. So hopefully the timing will be right.
Wow. First off, congratulations for starting your other company, Databento, and I'm sure your company will miss having you, and it's such a big decision, right? And after you leave the company, how are you guys planning on running the company, and how are you going to maintain the same momentum as when you were there, right?
Oh, it'll be fine. I'm sure things will be okay. The thing is for me, it's not so important. I guess the concept of loyalty, I know, is a lot more important in Japan. Your company is like your life, and it's important to be, really never talk bad about your company and stuff. But I think for me as a manager, I've grown a lot more over the years. I've become a lot more, understanding of people. So for instance, we have a lot of former employees, actually our current employees, the first day they join our company, the first thing I tell them is no matter where you go, even if you want to use this as a ladder, as a stepping stone to your next career, your next company, that's great. I'll support you, 100%. And if you want to apply to other companies, just let me know. I'll give you a good recommendation, on
that's
the first day
nice
of work at our company. Yeah. So that way they understand it's full transparency and honesty, and they don't need to hide their secrets, and feel if they have something bad to say to me, something about me or about the company, just tell me, right? And that way it establishes a culture of honesty and transparency for everybody, that I understand where our company is not the best in the world, and there's no such thing as a perfect company for everybody. So maybe we're a bad company for many people. So if they want to leave, that's great. Just, we'll be supportive, right? It's not like an enemy kind of war. We're not fighting here. So
totally.
Just be supportive of human beings and your fellow careers, because everyone deserves their own success in their own way.
Absolutely.
So that's what I say. So for Domeyard, I think that I feel the same way. It's kind of no matter what happens, I'm always going to be supportive, always going to be happy and proud of where people end up, and also where the company ends up as well. It's hard because I feel it is hard kind of emotionally, because when you let go of a company, you feel like it's a baby. It's I'm giving up.
I can totally feel it.
But I think also you realize it's time, to move on. I spent 10 years already of my career pretty much in this hedge fund industry, and I want to make a positive difference. And I feel like Databento is a lot more positive in terms of what it's doing for society in general. That's another funny thing is I feel in America, especially younger people today, care a lot about what difference do you make in society, right? So how
definitely.
So I feel that way too. It's I want to make a real difference, and I want to leave the world in a better place than it was. And as a hedge fund, all we do, to be honest, is make billionaires even richer. And that's great for certain people. But for me personally, I've done that for many years. I'm ready to now help other people in the industry. So Databento is the goal for our company is actually to start small and to help teams launch, and to help basically companies grow and scale over time. So trying to help other companies in the industry instead of ourselves.
Yeah. Thank you so much for sharing. And we'll definitely talk a bit more about Databento a little later, but I'm very much surprised that you brought up this at our podcast. I'm also honored to hear the firsthand information from you directly. So thank you. And I wish you the best with your new endeavors at your next company. And I'm sure Domeyard will be fine. And with all of the solid foundation that you already built at the company. And speaking of the the current foundation, all the infrastructure, all you guys have created throughout the past almost 10 years since you've founded the company. I wonder, if I were to dive into a little bit into the technology that you have at Domeyard, I wonder, like, since you mentioned that you built the whole algorithm from scratch, like, like by you guys, like by yourself. I wonder, how was that like even possible with like for you guys with little experience, right, with in the industry back then? And also, you mentioned that your partners, they had experience in like perhaps like computer science or engineering or coding, but that's a different world from high frequency trading, right? So how did you guys make that happen?
Oh man, trial and error. I'm just like,
wow.
It's to be frank, like a lot of it's hard, right? Because you're right, you need experience in order to be able to build something like so big and impressive from scratch. And what we learn in a classroom or in a textbook is usually like completely different from, how to actually build it, right? And so a lot of it was honestly just learning best practices from the industry, and then and also we had a lot of supporters, mentors, people who, and investors who could take a look and, we can check with them and be like, okay, is this the right way to build it? Is this the best practice to be, writing this code or whatever it is? And so kind of learn from those experiences as well. And then also one other thing we could do in this space is kind of that lean startup method that you hear about all the time, which is like, build an overnight MVP, a weekend MVP that's maybe not the best quality, could be broken and really bad, but you get feedback from, for us, it's like from the markets, we get feedback like, oh, this is terrible. And then we go back and test it and try again until it took us almost 3 years to launch the fund.
Wow.
That's very long for like a hedge fund, actually. I would say like, usually what I recommend is like, if you're starting a fund, try to launch within 1 year if you can. So 3 years for us is extremely long, but I think we're really lucky that we got to launch, to be honest. But yeah, a lot of it was just because we were still like experimenting and seeing what was good and what was bad. And also, even if we hire people who like built systems at their previous companies that are similar, but even then we have to think, how do we make it better? How can we not just repeat what's been done already, but like try something completely new. So that was also a big challenge and to figure it out. Yeah.
And did you guys like outsource at all, like from the very beginning? I wonder like, so it took 3 years for you guys to build everything, start from scratch. And I just wonder, if it's just like Jonathan, or if it's just you three like building it, it's definitely, I personally thought like if it was me, it's almost like nearly impossible to do it, right? Even though having like some, like as you mentioned, you had like resources and mentors and you dedicate so much time. Like, did you have to outsource? Did you have someone to help you?
That's a good question. So we did hire a bunch of employees even before launching. Like I think we got up to about 15 people by the time we launched. Oh, wow. And so we did have like a team of full-time people supporting us. In terms of outsource, the biggest reason
was it profitable at all back then? Like, because you didn't even launch yet, right? And you already started hiring people.
Oh no, we were not profitable at all during that time. It was very difficult. Actually, that was probably the most difficult period for us because we weren't trading. We didn't launch. We didn't have any money, and so our bank account, we still had to pay our employees a salary. So every month I check our bank, and it's just the amount's just decreasing like so much. And it makes me very nervous. And I remember like we would eat like ramen, like the cup noodles, and we would eat like vegetables. So we lived like really poor people. And then it's kind of sad. My parents actually took money out of their retirement account to try to help me pay for my rent because I didn't have any money in my bank account to pay for rent anymore by the time.
It's very supportive of them.
Yeah. And so they paid the penalty, to take money out early to help me with the venture basically. And then, just a couple $1,000s, but it was enough to help me pay for my rent. And then after, it was just so funny because we were living so poor. And then like after we launched, like the difference is just insane, like totally crazy. And I guess I forgot to mention, like the reason why we stopped trading and during that time was because, when you're trading from a dorm room, we were doing kind of more mid-frequency trading. It's difficult to do high frequency without building your software. And then we decided to do high frequency. And so we had to build, after my graduation, like build out all the software and tools. So we stopped trading for about 3 years and had to like spend time just building and breaking stuff, I guess.
Oh, yeah. That's tough. Considering you had 3 years to had to use 3 years to prepare for the launch, but it's definitely worth it, right? And you mentioned that you like outsourced and you had to like hire people to work on it. And also, I think you mentioned in some of your interviews in the past that your firm, like the infrastructure, the technology is very fast and smart, right? And it took 3 years for you guys to build such a fast and smart system. I wonder how is it so fast and smart and different from like other competitors out there? And how like what do you even mean by like fast and smart, right? How to be fast and smart?
Yeah. So one of the most important things is like, to give you some context in finance, every day in just 1 hour in one exchange, you get like 300 million or so messages. So basically that means people are placing orders, canceling orders, doing stuff in the market so fast that with the human eye, you cannot possibly see what's going on. And so in order to truly understand all the data and truly understand what's going on, you need to be fast. And that means having fast, basically data, these feed handlers and data processing tools where you can basically take in all this data and analyze it with a computer really, really quickly so that you don't miss opportunities that are like, very short period opportunities like that. So that's what we mean by being fast, is like not missing out on when there's hundreds of, millions of trades basically happening every hour. It's really important to be fast to be able to capture the full scale of those opportunities. And then being smart also is important too, though, because it's a difficult, we call it a paradigm or we call oxymoron or paradigm. There's some word for this. Where like in trading, I don't even know English. So basically what it means is like, when an algorithm is smart, so like a lot of people talk about like AI, and actually HFT is not AI at all, surprisingly. And the reason why it's not artificial intelligence is because AI is really slow. Machine learning techniques, right? They optimize for throughput. We optimize for latency. We want to be fast, not like smart. And so
could you define latency for our audience just a little bit?
Yeah, sure. So it's basically just the speed at which you react to something. So like you want to be able to place this trade right now. How fast can you actually get that trade from your decision all the way to the implementation and execution of that decision? Right. That's like this. It basically means speed. Except latency is like you want to be lower. So it's like you want to be the lower the latency, the better, because the longer the latency, it's a kind of a delay. Basically, what does it mean? It's like you don't want a large delay in what you're doing. So
Thank you. But that was super helpful, and it's great that you have such a fast and smart system. And you mentioned that because you guys do not deploy like AI because it's slow. Like what are the technologies that you guys use, like specifically?
So the other technologies we use are basically like for most trading platforms, right? There's a couple things you need. One is like you need some method of getting good, like processing data from different sources. So like maybe you have data from an exchange that's trading, or you might have data, alternative data is very popular these days. So alternative data is like textual news feeds or Twitter feeds, very common, Elon Musk's tweets, or it can be even like satellite data. So like Walmart parking lots, so you can look at parking lots of different stores and see the foot traffic before their earnings announcements. And you can estimate how much they're making just based on like foot traffic or like wheel rigs. And there's all kinds of other ways of getting data. So that's important, is like you need some kind of machine to be able to process all of this data and then generate insights from that data. So like, whether that's for us, we use, since we're high frequency trading, we use different like techniques that we kind of filter through the data, and then we use mathematical techniques to be like, okay, here's a pattern we see, like whatever pattern it might be, a mean reversion pattern or like a momentum pattern or something, could be pretty basic like that. And then we notice a pattern, we're like, okay, well, let's trade that let's test it out in the markets and see if it actually works. And, so you can base it off these patterns, and we make predictions based off those patterns and then go from there. It's kind of similar to how, let's say our mom and dad trades with like a regular broker, right? Like Robinhood or something. The only difference is just that we're using a computer to analyze things a little bit faster and to seek out patterns a little bit, I guess, faster, and hopefully with like less emotion and error in the process as well. I'm trying to think if there's anything else that's important. Yeah, so we do that. And then the other thing you need to do, though, is you need to have some method of actually making the trades and executing those trades as well. And so, that's like a broker, right? Or some kind of platform that lets you trade. A lot of people use tools like interactive brokers, or I don't know, there's a lot of those, or like a Robinhood, if you're a retail trader. And so for us, we created our own kind of system where we can place orders directly with the exchange. The biggest reason is because we needed both speed and control over our systems. And so by creating our own, we get kind of both of those, but also it takes a lot of time. So that's the worst part, is it takes way too long to build.
Yeah, definitely. Wow. And I'm sure like even after a few years of like, before you first launched, you kept on like optimizing the whole system. And like it's really impressive that you and your partners were able to do this. And especially for you, right? Like in addition to your partners were focusing on like the technology and the strategy side, you focused a lot on fundraising from the very beginning, right? And studies show that from the year of like 2011 to like 2013, just, around like 3% of venture capital funding was raised by female CEOs, which was like pretty much like 1.5 billion out of 50.8 billion in the US, which, is nearly nothing, right? So I just wonder, for you as a female funder, since you were in charge of fundraising, how you were able to, to do it like so successfully, right? What kind of strategy did you have as a female who was raising in the space?
Yeah. So the biggest thing we did was just go out there and do it. That's the most important thing. So I signed up for every single pitch contest in Boston. I lost every single contest. Also, I never won a prize during my time pitching, but it was really important for me to do that because it's good experience, and also it puts your name out there. So I think the most important thing is just you do it. I never once thought about like, don't think about gender or anything like that, and just try to just do your best, right? And hope that you do okay. It was funny because there's one contest that I think it was sponsored by Microsoft. And I actually lost, there was 30 startups that pitched. And I remember we were in the bottom 5. We like lost really badly in this contest. It's kind of embarrassing. But then after we lost, I was like feeling kind of bad because rejection is interesting, by the way. Like as an entrepreneur, the biggest thing you have to learn is like how to be rejected, how to handle rejection, because you get rejected like all the time, basically. But it still hurts every time anyway, because I'm human and I have emotions. And so it still hurt a little bit that we placed so low, but it makes sense today when I think about it. Like, okay, when compared to startups that are curing cancer and saving disease and poverty and, saving lives, right? Like we are literally a money-making machine. Like that doesn't look good at all at any event. And so anyway, after the event, I said thank you to the organizer because I just felt grateful. Like these events are free to the community and, still really good opportunities. And then she was like, oh, hey, have you met this guy before? And she pointed to like an older man, and she introduced us. And it turns out that he started his own hedge fund 40 years ago.
Oh, wow.
And that hedge fund manages $100 billion today. And I was still, I was like, oh, I had no idea. And so we talked for a long time, and then decided, he actually decided that night he's going to invest in our company and be the first check. So he wrote the first check into our company.
Wow.
And and it wasn't a lot of money. It was.
I'm not sure if it's okay to ask, but may I ask who that was? Like who wrote you the first check?
So that was Gary Bergstrom. He's the CEO of Acadian Asset Management. Acadian's like one of the biggest.
So he was
asset management.
one of the like the very first few people to back you guys.
Yeah. So like, what are the chances, right? It's like, it was really crazy because he wrote that check and he basically, his story is very similar. He started his hedge fund, Acadian in the, I think 70s. It was a long time ago. And
Yeah.
he was very young, inexperienced, and somebody was his investor, his angel, and gave him a chance. And he said, he wants to pass the baton to the next generation. And I felt so lucky. And he didn't, it wasn't a lot of money. His first, it was like $100,000 maybe. But it was funny because I was so poor back then that I didn't know a bank could hold that much money. So I called the bank and I was like, can you even like hold $100,000? Like, I didn't know what to expect.
Yeah. Wow.
And they were like, haha, they kind of laughed at me. And then now it's like, okay, we trade billions of dollars a day. It's like no big deal. But then it was kind of funny because also that pitch contest, the top prize was $5,000 and we took home $100,000
wow.
from, after losing the contest. I felt bad. And so it's like, kind of feels like a roller coaster. I literally went from feeling terrible because I lost and then meeting this guy at the very end of the event. And then he invested $100,000 that night. And I was like, oh my gosh, like
that's like a turnaround, right? You never know how things are going to end up, and what you did was you just grasped every chance that you had, right? You talked to the women and she introduced you to Gary, and that's how things all turned around. It's because of your effort, right? That's very, very impressive. Yeah. Well, thanks for sharing. And I also know that you guys raised like a few rounds, like from the very I remember you talking about your firm as like both a tech firm, but a fintech firm, but also a hedge fund, because you're a tech company from the inside and a HFT from the outside. So I wonder, like, when you were raising, since I remember in your previous interviews you mentioned you raised a GP round and an LP round. Like, how did you come up with that unique approach? And also, like, what were the steps that you took to achieve that?
Yeah, we were one of the few hedge funds, probably one of the first hedge funds to ever raise early stage venture capital for our business. It's very rare for a hedge fund to raise venture capital. Why? It's kind of like that Spider-Man meme with like the two Spider-Mans pointing at each other. So hedge funds and venture capital are almost the same thing, by the way. The only big difference between the two is that hedge funds invest in mainly like publicly traded and late stage type of, companies and securities, mostly publicly traded. Sometimes it could be private too. And venture capital is very early stage private companies that they invest in, right? And so for a venture capital to invest in an early stage hedge fund was kind of like, why, right? But what we had to do, we had to raise venture capital because I had no money and I needed to feed myself and my team before we launched. And so, the good thing about high frequency trading was I could tell them, look, we are building our own technologies and there's a real exit, hopefully a real opportunity to exit down the road one day. So maybe that's being acquired, or even like IPO is a possibility too within our industry. But also the technology we've built does have some intrinsic value. So we're able to, sell it or license it one day. And so they invested on that premise of like, oh yeah, it's almost like any other startup, except that, we're like a hedge fund. So we were able to raise it. It was kind of weird. We started almost like a trend, and then now it's becoming a lot more common. Hedge funds are raising more venture capital and going out there, and, it's okay. You don't have to, because the other thing is like kind of showing you don't have to have like 40 years of experience in order to start a hedge fund. You don't need to have a huge wallet and be like a billionaire to start a hedge fund. So long as you have the skill set and that you're able to like raise funding as well, like that's really important.
Yeah, definitely. So pretty much you guys, like, in order to build the initial infrastructure and the algorithm, you raised capital. And then after that, after it was launched, you then raised the LP round, right? Like to start as like officially as a hedge fund, right? Am I understanding that correctly? Okay.
Yeah, we raised, it's called
amazing.
GP financing and then LP financing at the kind of concurrently at the same time.
Yeah. Wow, that's really amazing. And I was, wondering, like, out in the startup world, people usually raise a few series by stages, right? Usually like within like a few years of runway. Considering you spent like 2.5 years, like 3 years to build your algorithm, I wonder like how much did you actually need to support that like whole development throughout the year? And and also like did you raise by stages, or how did it work for you guys?
Yeah, that's actually it's a funny question I always ask when I teach classes in the college. Sometimes I like to like give them a question of like, guess how much money we spent before we launched, and the question is like, is it 0 to 1 million, 1 million to 5 million, 5 to 10, or like 10 to 20 million dollars? And it's really shocking to see how much students think, it costs and takes to launch the fund. So realistically speaking, it cost us between $1 to $3 million.
Wow.
To get to launch, basically probably about maybe closer to $1 million, I would say. But then after launch, we still continued spending money on like operations and other things too. So the costs really add up over time. But it's a pretty extensive kind of venture. And another big misconception is I feel like a lot of people think they can just run a hedge fund on the side for some reason, especially in America. But it takes so much effort and work, and you realize like you have to do compliance stuff and fund administration and audits and all these other things. And you realize this is a full-time job, and not just and it's not a one-person thing. You have to have a team of people to do this in order to really sustain your operations, unless you can outsource almost everything. But for us, we couldn't outsource anything. So we had to have like a really big team of people in order to pull it off, basically.
Wow. Yeah, I see. And definitely, it needed the initial capital to be able to build everything, right? So it was really necessary. And, just out of curiosity, like, how many times did you raise by like stages at all, or it was just like all at once, or you had to like raise a bunch of times?
So Domeyard raised a Series A, B, and C round of financing. So it was basically like we raised one round that, smaller valuation. And then once we ran out of money, we're like, okay, well, we need more we hadn't even launched yet. We're like, okay, we can raise a little bit more. Wow. And then we like finally launched and then decided to raise some more kind of growth stage capital to help us grow a little bit better. So we raised it very similar to how maybe a VC, like very similar to how other startups might do it. But
Wow. That's what makes you guys unique, right? That's really, really interesting. And I was also wondering, so like for you guys, you raised all the capital, you've developed your technology, and I was just wondering, like, how did you because right now you have around like 55 billion assets under management, right? And you have like you mentioned earlier, like 7.1 billion transactions per day. Like, please correct me if I'm wrong. But like when you are choosing all the investors, right? Like how do you do like due diligence on them? Because I remember reading through your tweets on Twitter that you mentioned the Joi Ito case, right? The Joi Ito, the former director of MIT Media Lab, he resigned after taking like $1.7 million from Jeffrey Epstein. So I just wonder, like, since you also mentioned that was not acceptable, that the MIT Media Lab took that money. Like for you guys, when you're doing the due diligence, right? That case pretty much shows how important it is to due diligence over investors. But like for you guys, I wonder how you do your due diligence and make sure your investors don't get into the same situation and you are receiving money from the proper people.
Yeah, so due diligence is a two-way street, and a lot of first-time founders don't realize that, and they'll just kind of take money from the first investor that says yes. And I think it's tough though, because for instance, we've raised money from some allocators, we call them investors, where Jeffrey Epstein was one of the investors in that fund, but we didn't know. And we would, during the due diligence, we would ask them, like, who are you? try to ask them who are your investors, right? But it's confidential information. So they're like, sorry, we're not allowed to tell you the names of these investors. Like it's just kind of illegal for them to say that kind of stuff because they signed non-disclosure agreements, and investor information needs to be private. And so most of the time, even if we ask, investors will just not talk about who their investors are behind the scenes. So that was definitely really difficult to navigate. But on my end, over the years, I've at least when I find out information, I try to draw the line for me. So like making sure that the investors we are supporting and working for are, that they're good people, and that they're all kind of striving for things in an honest manner, right? And that they're just not doing anything like whatever Jeffrey Epstein did, which was crazy. And when we found out about that, that was definitely very just very shocking and disappointing. And also because it wasn't just like one investor that it wasn't actually Joey Ito's fund, I don't think, at the time, that had invested in it. It was like so for him, like the fund that invested in us didn't have Epstein money in it, but there were like other funds that had invested in us that did. So it was kind of like a difficult decision. Like we had to decide to redeem them, basically. So like let them go from the fund and basically redeem their money back, and just kind of part ways. And they all understood. They knew, like, for us as a young manager, that we care about making a difference, and headline risk, and everything is real as well. So that's
it was before you knew what was going on with like Jeffrey Epstein, like when you were
when I first Googled him, I think before he was arrested or whatever. And I remember checking him out, and he, like, all the photos that were like him and the prime minister of different countries, British royal family, famous Hollywood celebrities. And I thought, okay, he seems just like a very big philanthropist, donor type of person. I had no idea he was a criminal at the time, because he, it was an FBI case at the time, but I didn't know, because FBI was still, it was a secret case back then. And then they revealed it later on when he was arrested. Everyone's like, oh my gosh, like, again, he was arrested again for this. Then they realized he's still going on.
Speaking of like FBI, I know you're working on your new book, and you kind of shared a little bit of story of you being like FBI coming to your office, which was like crazy, right? Like what was that like? How did that actually like happen? And it must be a crazy experience, right? And FBI walking to your office.
It was a kind of a crazy experience in terms of, I still remember that day, because I was meeting with an investor from London, and we were congratulating each other because he had just invested in us, and everything was going really great. And all of a sudden the FBI just comes into my office. And
scary.
The whole company, everybody's like, what is going, like, what is happening, right? Like, are we gonna die or something? And then my assistant comes in. I was still meeting at the time. The assistant comes in my office and says, hey, Christina, I'm sorry I have to interrupt your meeting, but you need to go now, and I was like, what the heck? Like, no, I'm meeting an investor, and it's not every day I can meet these investors. It's a rare occasion. This billionaire flew all the way from London to see me, and then the assistant was like, it's the FBI. Like, you can't, you don't have a choice. And I was like, what? And then they just whisked me off and brought me into their office for like some interrogation. And I was so scared. I was so scared, because I thought, like, am I going to get arrested? Am I in trouble? Did I do something wrong? Like, I didn't know if I did something wrong. But then when they interrogated me, they asked for, like, what are the names of all of your investors? And, one of the names of Jeffrey Epstein's, like, affiliate friends came up, because they, like, had invested in our fund at the time. And then that was when I realized that they were after this guy, Jeffrey Epstein, as well as like some of his co-conspirators in the case, and that they were investigating that, and they were talking to me because they knew I was like, close with them for whatever reason. And so I like just cooperated with them, and they asked a bunch of questions and stuff, and it was kind of a scary experience. I don't know if,
definitely,
you were on Facebook at the time. I don't know if we were friends on Facebook back then, but like I was like posting all over Facebook being like,
yeah,
my life, what's the meaning of like, am I gonna die? Like I was just